Well, look at this, guys. Boy, what a nice recovery. I mean, really just after this is a 30-minute QQQ chart. I'm going to get to the SPY here in a moment, but everything rolled back up into upward trending. I would not be surprised actually to see this QQQ end up in the 500 501 area today. Could be a very strong squeeze up into this move. And again, you got to be really cautious around big data, jobs data. Sometimes things can get way out of hand emotionally, and you really need to, cut back. Start trading like one third, one quarter positions, and then step back into these trades level by level. Okay, it's very difficult to be swinging with big positions when you're wrong over here, and you need to remember, step into it slowly but surely, like I would advise here. Getting a little pullback right here, getting some upward trending on the GAN Fibonacci system. Big solid move here, relatively strong here. No big upward trend here yet. This is a longer term stochastics. But remember, my analysis suggests that we're going to see the QQQ potentially move up into this area. So really be aware that, we could see a nice solid upward move. I'll make that blue. Nice solid upward move here after this pullback. And you can see how it came right down to this channel level. Let me get rid of this and scroll back out. So that channel was off of a GAN angle moving forward here. But again, very solid recovery, short squeeze. I mean, kind of like I told you guys yesterday, sometimes this news hits and people kind of freak out. And the reality is you got to look at it as what's actually changed. Has anything changed? We're moving into Q2 earnings, expecting to see strong tech and other data. So far, it's been pretty good. Do we have any major real concern for the markets going forward? And until, like I keep telling my clients, my subscribers, until something major happens, it's going to continue to melt upward, in my opinion. So let's take a look at the SPY and big, beautiful move up above yesterday's opening price sell off. So we have here and you can see the strength here. Still not getting any upward movement here. That's fine. This is very slow. Um, you can see here the upward move. We're stalling out a little bit. We're up in the 562, 563 area. Have been up just shy of 564. I already told members that anything above 560 and a half was really pushing it. Now, Monday's coming into play here. And remember, Monday is our last engulfing pattern, our exhaustion type rally. This could be a very big move. And to give you an example, if you're planning on holding anything over the weekend, you've got a potential here for Monday, maybe opening up in this area. I don't know. We'll see how it closes today, and maybe rallying up into this 570 area before stalling out through Tuesday, and then maybe breaking down fairly hard on Wednesday. So you've got a pretty good opportunity here. I'm going to do an end of day video, but looking very solid. I mean, just absolutely beautiful. And remember, I was the one yesterday that made the assumption that we would see continued upward trending. I didn't think CPI was going to disrupt the market so much. The cycle pattern, in fact, let me go find it. Look at all these daily cycle patterns. Cycle pattern here indicated where are we? Breaking up and down in counter trend mode. So I think I warned you that this would normally be a fairly strong downward day, but because of this upward momentum, and because we had been very light on this momentum rally and then saw the bigger move on the gap up higher day, I was expecting this to move down a little bit and then really find some momentum after CPI. But it didn't. It just broke down all day. So, as far as I'm concerned, the pattern was 100% accurate. Called it. Remember, months in advance. This has actually been here for 2.5 years. I think I even showed you guys. I have patterns going out to 2035. So I know what every week is going to look like going out to 2035. And I can read into that for swing and position trading. Now, where we're at right now is this carryover. I told you this morning I thought it would resume back into the bullish trending. Then we move into the weekend crush, reversal rally, exhaustion carryover in a counter trend mode. So this will be interesting. And then we get a possible breakdown and then a major crush in counter trend mode. So now what do we learn about counter trend modes? Counter trend modes, you've got to take the pattern and potentially invert it. A major crush pattern in an uptrend would typically be a down bar. A major crush in counter trend mode in an upward price trend would be a very strong upward trending bar. So we do have this exhaustion carryover in counter trend mode, and we do have the major crush in counter trend mode. And that could mean, I'm going to tell you right now, that could mean that, my expectations of that pullback, oh, still drawing. And of course, looks like I do something over here. I always end up in drawing mode. So, really, that exhaustion and that exhaustion pullback may end up bouncing very quickly and doing something like this. May end up pulling down a little bit or maybe off of this channel. So we'll go from here across this channel, set this up as yellow, Control C, Control V, set this up potentially off of this high. So we may end up really having a bit of a pullback. And again, I expect a pullback next week and then potentially rallying right back into this upper trend before we go higher. And that, again, is a very viable solution with these counter trend exhaustion carryover on Tuesday and a counter trend major crush. This is a very big bar typically. And then we get into bearish exhaustion. So we may see a very big move up into this area. And I think we could be in for a bit of a volatile surprise. So here we have Monday, here we have Tuesday, here we have Wednesday. Remember, Wednesday is our possible breakdown in trend mode. And then we end up going into Thursday and Friday. Our major crush pattern may be a very big upward recovery bar, kind of like we saw here. And it all stems around earnings and where we're at. Now, we've moved, obviously, our support level. Let me do this. We've moved our support level a little bit higher. So, our critical support level, now I teach this in my videos. The 382 to 50 level is now out in this area. The longer term support here going all the way up is now up to this area. And that means our long-term support between 382 and 50 is right down here. So remember, until we get below this 559, 560 level, that is short-term intermediate support. I don't worry about anything until we get below this level. And long-term, we have support right here at the let's call it 555 level, down to the 553 level. And this would indicate a major trend change. We get below this level and do not reject back up higher. That means we're looking to set up some new lows way down over here. Okay, don't want to waste your time. Let's take a look at Bitcoin. Lots of people following me on my Bitcoin projection. I warned that we were going to see support at 5,700. Whoa, look at that. Am I on the right chart? Should be, unless it's over here. Bitcoin daily. Yeah, this is it. So get rid of the bottom numbers. And here we are setting up our rejection point, trying to flag. Right now, this flag looks very viable. This lower upper channel for the purple. We could see a move all the way up. We're seeing very strong support right now. We're up $1,000 today, really holding above that 5,700 level. Now, understand this is rejection and support is fuzzy. It's not a hard level. It's not like concrete. Support is not, and resistance is not like concrete. It's almost like a stratosphere. You move through it, and then you go, oh, I'm in a new stratosphere or a new level. And then it kind of bounces around sometimes or gets above it and stalls. That's how support and resistance work. It's fuzzy. It's like kind of like, I don't know how to say it, moving, from 6,000 feet to 7,000 feet. Is there a hard barrier? No, there's no hard barrier. It's just a new level. Okay, that's all it is. So we're going to see how this plays out. This is looking great. Gold, let's take a look at gold. I had indicated that we were running into a base and a bottom. Gold is moving very strongly right now. Yesterday was gorgeous. Today we've seen it come down and rally back up, but again, we got to watch how the dollar plays. And I'm going to tell you right now that when gold gets above this level, try to give you an idea, you can see the rejection here. You can see the rejection here. So I am just going to draw this and tell you that from basically this level, once we get above that rectangle, okay, gold's going to make an almost immediate run up to 2,600, 2,650, maybe even higher. Okay, it's going to make an immediate run once we get above this level. And I think it's probably only a couple days away from doing that. There is a lot of fear right now, and metals are acting as a very solid hedge. Let's take a look at silver. Silver's stagnating a bit, but we still have that same rejection level. It's a little bit lower. If you understand rejection, you see how it went up here, closed here, and then came down, went up here, doji, and then came down. So I'm really looking at the middle lower range of the dojis. And there's your range for gold or for silver. Let me try to drag this out. So we've got to see silver get above 32.25, 32, call it 40, and then we could be really off to the races here. And silver, remember, I've been showing you how silver and gold move in legs. So I'm going to draw this out, showing you what's going on. We'll probably get above this level, stall a little bit, then move up here, then stall a little bit, and then continue to move higher. How can I guess that? Well, it's pretty simple. I can come over here and I can look at trends and rejection points, indicating what I think is going to happen by simply mirroring 100-point extensions, or I call them legs, moving higher. So, okay, here's my leg moving higher, right up into that area. Here's my leg moving from this level up to this level. Here's my leg moving from this level up into this level. This one's a little high. Next leg would be the same thing. And this is price moving in 100% measured moves, and it does this repetitively. I can go all day long moving these. Now remember, these measured moves are typically a Fibonacci level. So what happens with these measured moves in Fibonacci is you end up with key numbers. You end up with 100%. You end up with 50%. You end up with 382. A lot of people call this 33%. So I'll just call it 32.8%. And then you have 618. And that is a 61.8%. Okay, now remember also that moves can happen in other numbers. There are other numbers out there, guys. There is a 7%. There is a 14.7, if my memory serves me right, percent. There is a 25%. There is a 75%. And there are multiples thereof. Okay, so if I were to go fix this, this would be 0.07 equals 0.147 equals 0.25 equals and 0.75 equals. So now there are multiples of these. So you could get a 1.07, or you could get a 1.25, or you can get a what's called a 97, 0.93. Sorry, it's a 93%. And what would this be? This would be 100 minus 7%. So you could get multiples like this. This could be a 100 plus 25. You could get a 100 plus 7. And these are all valid. Okay, this is how Fibonacci works. It's an open, it's basically a fractal. Okay, and you can mix whatever multiplier in to see what's going on. So these measured moves are very common because psychologically they happen. And you can see that this one here, this one was a little short. Okay, and that may fall into the 93 percentile range. And you can see that this one was a little long. That may fall into the 125% range. This one, assuming it falls right over to here, may be an exact 100. This one might be 114%. So you need to understand that Fibonacci, the key numbers you want to watch are right here. The more abstract numbers, which is 25 and 75, is actually very common. But these 7, 14, and there's a bunch of other numbers, guys. But the reality is they all come into play. And you need to understand that these are fuzzy numbers too. So yes, we look for that's why I teach rejection. So understand that rejection, price rejection, is often more valid than highs and lows. So this is very important. I find price rejection to be a key element in my understanding of price trends, direction, setups. So again, I look for rejection. What is rejection? Okay, this is a daily silver chart. What is rejection? Let's go take a look at these and say, what is rejection? Rejection is when price tries to move down on a very strong bar and then rejects. Now, normally what I want to see off of this rejection, this would be considered minor rejection here because we didn't clear the range of the bar. But if I get 2 or 3 bars that then follow that fail to move lower, you can see price tried to move lower and failed, tried to move lower and failed. Then we get this rejection. This area becomes very clear rejection to me. I see this as, I see this as very clear price support at a rejection level. Then I can see here, price came down, stalled, 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 it rejected, moved down. So we have a secondary level of support right in this area, which again, it held price for a bit, and you can see it moved over here and stalled price a bit here, but you can see this rejection moving up, all the way up, came back down, rejected, pushed higher again, rejected. So where is the actual rejection? In my opinion, the rejection is between this level and this level, and this is going to act like a support resistance level. So each one of these are support and resistance. Understand that when price is above it, it becomes support. When price is below it, this becomes resistance. So right now, this is resistance. And these all act as support. And I can go through this and find intermediate little levels all day long. We have rejection right here. We have rejection right here. We have rejection right here, which was confirmed again here. I would draw this right across this level. That's bullish reject or bearish rejection. We're getting a little rejection right over here that's lining up. As I showed you, you got again rejection right here, big solid rotation, clean rejection right in this area. So we can do this all day long, and you can go down into 2 minute, 3 minute, 5 minute and find this type of rejection. The theory with this anchor bar and Fibonacci price theory is that price attempts to make new highs and lows no matter what. So at all times, guaranteed, 100% of the time, price is always trying to make a new high or a new low. If it fails to make a new low, which it came down here and stalled and then moved away from this low, we would look for it to take out a high. So intra bar, we had this little high right here. This is what's called a standout high. We closed above it on this bar. This bar told us we are now moving higher. This bar right here told us get long, market's going higher based on Fibonacci price theory. And it also took out this high and it came close to taking out this rejection level. Now we're moving higher, higher, higher. We have no standout low that's been taken out. We do have a new low here, which is going to probably set up a standout low. We'll see how it plays. But we've taken out this high, which is great. And now we're trying to see if we can take out these highs. So what we're doing with Fibonacci price theory is we want to see this high taken out and then secondarily this high taken out. If price fails at this level to take out these new highs and particularly this, particularly this high right here, this new most recent high becomes very relevant. Why is it relevant? Most recent price highs are going to become more, especially in they're shorter than these upper highs, meaning lower, they become our critical levels. So we're looking right now basically at this being our most recent low. We don't have any other low. We have this low, which is setting up, which will become a critical low. Let me hide these. So you do have this low, which will become a standout low here in the near future, but you have no other standout low except for this one, which is actually an ultimate low or a unique low because it was a unique low and it didn't have a low price touch it for 15 to 20 bars. You really need to watch my Fibonacci price theory. So at this point, if it fails to take out this high, then it's going to come down and try to take out this low. Okay. We have no confirmation of a downward trend yet. We have confirmation of an upward trend in silver. That means that my estimate would be that we are going to take out this high. We're going to take out this high, and we're probably going to try to go higher. Until I get any confirmation of the other direction, I cannot stand in front of this upward trend. It's an upward bullish trend. There's nothing telling me to short this market right now. So we'll come back here to the SPY and look here again daily. SPY, same thing. Bullish, 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 bullish. Good, solid, strong close. Look, we might actually get up into the 568 level before the close. But again, I am getting very bullish trending, staying above this gap. There's no reason for me to stand in front of this train and try to get it to change direction and short. I do not want to short this market right now. Reason being, you're going against the trend. You're going against the confirmed direction of trend. It's kind of like literally standing in front of a moving freight train and trying to get it to change direction. You're not going to do it. You're going to get run over. Okay, so I don't want to carry on too much longer, 24 minutes. Let's see how this plays out. I'll go back and end on the SPY. We are seeing a massive rally here. And let's go back into 30 minutes, 10 minutes, and realize we could see a very strong squeeze. Okay. We could see a very strong squeeze. Well, give you a little hint here. See this yellow line? Let's go all the way back out. We're already above an upper channel that I just drew. So we may pause right here going into the end of the day. We got 1 hour to go. We may pause right here, may squeeze a little higher, But at this point, I think the move is pretty well done. And then I'll do a follow-up at the end of the day. But see this channel, price channels are also very, very important. And I drew this just in the earlier part of this video, so back it up and look at it if you want. But we're probably pausing right here. This is probably it for the day. And if we get any type of upward move, it's going to be an aggressive short squeeze into the end of the day. Okay, guys, that's it. Talk to you soon.